Mortgage rates are back at the 7% levels, and a new study from Zillow shows multiple creative ways buyers are structuring their purchases so they can take advantage of a little less demand and get the house that they want. I'm going to break down all these things next. And if you like what you hear, you get some value out of this, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team about how we can help you understand all these options, you can do that with the link in the comments. 7% mortgage rates. It's a number that scares some people off. There were some people that predicted 5% mortgage rates by the end of 2024. It's clear to me we're not going to see that unless something really bad happens. And we've got a Fed meeting coming up and some other things that could provide some relief, especially just getting past the election. With all that in mind, what's most important here is understanding your options. And that's what a good real estate agent does. They give you options so that you can know what choices to make and transact in spite of 7% rates if it's the right move for you, your household, and your family. So there are 5 different things to explore that buyers are using right now, according to a study from Zillow, to maybe bring their payments down or have a lower rate for a short period of time. The first is an adjustable rate mortgage. So if you don't know what an adjustable rate mortgage is, it's a lower rate for 1 year, 3 year, 5 years, or 7 years, that they're called ARMs, adjustable rate mortgage. It's an acronym. And then once that adjustable rate period passes, then it goes up to the higher rate that was quoted. Now, these are going to be different with every mortgage company. All the more reason you want to talk to a number of different lenders when you're figuring out if it makes sense to purchase or not, and what the options that the adjustable rate will kick in after that 1, 3, 5, 7 year period. So that's going to allow you to have a lower rate and maybe grow into your payment. If you're okay with a 7% payment because you know you're going to be making more money in a couple years and you need a smaller payment down the line, that's one option. Adjustable rate mortgages are something you should be talking about if you're a little payment adverse in the current climate. Number 2 is a buy down, right? So a buy down is a fee you can pay up front, like points, to buy the rate down with the mortgage company. So maybe you're in a cash heavy position and you want to get a lower payment. So what you can do is pay some points up front, get a lower rate, so you're buying the rate down. There's a cash out of pocket expense here that you may not run into with a normal market rate, but this is going to keep your payment lower long term, and that could make a lot of sense for you. So that's another option we're seeing people use according to this survey from Zillow. The third option is down payment assistance. So this could be a gift from a relative. Maybe your parents are able to help you out with some cash to close. This could be some programs that are out there like the K-Fit loan program, which, again, all these things, if you want to go into more detail, you can schedule a call with our team to do that. The K-Fit loan program, that's something local to our marketplace. That is a forgivable second loan that helps you come up with more money. There's a lot of options here, and there's a lot of local programs that are out there. There's grants available and things you can take classes for. The point is, these are out there, and you've got to have an agent that understands all this and can help you do the research. So that's option number 3. Option number 4 is a lesser term. Maybe you want a 15-year loan or a shorter loan period. Now, the payment will be higher because it's amortized over a shorter period of time versus a 30-year period of time, which is kind of the standard that we normally see. And the rates are lower because it's a shorter repayment period. So that could be another option for you. That's option number 4. And the 5th option that a lot of first-time home buyers are using right now is they're actually getting roommates. There's this strategy out there called house hacking, where you get people to live with you and they contribute to the mortgage. Getting a roommate and paying you rent can be something that will help you offset your costs, and that's how to deal with all these rates. Are these traditional? No. Have these things happened before? Absolutely. These are options, and a great agent will present you with all your options so you can understand how to navigate. When rates go up, there is some opportunity. It's going to create a little less demand for homes, and we're still seeing a lot of demand here. Average time on market's about 11 days in the greater Philadelphia area and the suburbs. It's closer to 60 days in the city of Philadelphia itself. And the good news here, all these options can help you deal with 7% rates. So if you're curious about any of them, schedule a call with our team and use the link in the comments.